Have you ever watched your portfolio crumble while experts insisted the stock was a strong buy, or sold a position only to watch it skyrocket days later? In the world of trading and investing, these painful experiences aren't just common, they're practically universal. And today I'm going to reveal why this happens and how the greatest trader who ever lived solved this problem nearly a century ago. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. The financial markets can seem like a chaotic battlefield of conflicting information. CNBC analysts scream, "Buy," while your favorite finance YouTuber warns of an imminent crash. Your broker recommends holding, while Reddit forums are buzzing with predictions of a moonshot. Has this ever happened to you? This cacophony of contradicting voices leaves even experienced investors paralyzed with uncertainty. But what if I told you there's only one voice you should be listening to? And it's not coming from Wall Street, financial media, or even the most successful hedge fund managers. It's coming from the market itself. Jesse Livermore, perhaps the greatest trader in history, discovered this truth through decades of triumph and devastating loss. He made and lost several fortunes before distilling his wisdom into one fundamental principle. The market has only one master, the trend. Not you, not financial experts, not economic theories, just the trend. Stay with me until the end, because what you're about to discover might completely transform how you approach trading and investing forever. Livermore compared the market trend to a hurricane, a force of nature so powerful that fighting against it is not only futile but destructive. The collective decisions of millions of market participants create currents more powerful than any individual or institution can control. Those who align themselves with these currents prosper. Those who fight them are inevitably swept away. But here's the truly shocking insight. All those expert opinions, breaking news headlines, and hot tips from connected insiders. According to Livermore, that's all noise, deliberately designed to separate you from your money. Think about it. By the time financial media explains why a stock moved yesterday, smart money has already positioned itself for tomorrow's move. What if the endless stream of market commentary, economic forecasts, and trading recommendations is actually preventing you from seeing the one thing that matters, what the market is actually doing? The price action itself contains all the information you need, if only you could silence the noise long enough to see it. The financial industry thrives on complexity, sophisticated algorithms, arcane technical indicators, and proprietary valuation models. But what if the truth is far simpler? What if the key to consistent profits isn't more information, but less? What if success comes not from predicting the market, but simply following it? If you're serious about mastering the markets, hit the subscribe button now. I share timeless trading wisdom that you won't find in mainstream financial media. Livermore's journey of transformation began in the bucket shops of Boston when he was just a teenager. With nothing but a small notebook and his observations, he noticed something profound that would later become the foundation of his legendary career. The market rewards those who follow its natural movement and punishes those who fight against it. This hidden truth seems almost too simple, yet most traders spend their entire careers struggling against it. They buy stocks that should go up based on fundamentals, yet watch in horror as prices continue to fall. They sell short when markets seem overvalued, only to face devastating losses as the uptrend continues relentlessly. The psychological impact of fighting the market's direction is not just financial. It erodes confidence, creates anxiety, and ultimately leads to decision paralysis. Imagine for a moment what your trading experience would look like if you simply aligned yourself with the market's path of least resistance. This mindset shift alone can create a profound change in your results. Instead of battling the current, you'd be carried by it. Instead of predicting where prices should go, you'd respond to where they actually are going. The market doesn't care about your opinions or predictions. It moves according to its own internal logic, a collective force beyond any individual's control. But how do I know which way the trend is moving, you might ask? This brings us to Livermore's second revelation. The tape doesn't lie, but voices do. In his day, the tape was the ticker tape that recorded each transaction. Today, it's the price chart on your screen. Either way, the principle remains unchanged. Price action reveals the unvarnished truth of supply and demand in real time. When Livermore spoke of voices, he meant the endless stream of opinions, forecasts, and explanations that flood the financial media. These voices are often wrong, sometimes deliberately misleading, and almost always biased by the speaker's own positions or interests. They offer comfort through explanation, but seldom deliver profit through accuracy. The price chart, however, has no agenda. It simply shows what is happening, not what someone thinks should happen. It doesn't care about your political views, economic theories, or investment philosophy. It just is. And in that pure reflection of reality lies its power. Think about the last time you ignored clear price action because some expert convinced you that this time is different, or that a reversal was just around the corner. The market continued on its merry way, indifferent to the expert's reputation or reasoning, while your account suffered the consequences. Now, I want to go even deeper into this topic by exploring how Livermore turned these insights into a practical approach to trading the markets. His method wasn't about predicting the future, but about recognizing the present and positioning himself accordingly. Behind every successful trade was a disciplined commitment to reality rather than hope or fear. If you've ever experienced that moment of clarity when you realized the market was trying to tell you something that contradicted everything you were hearing, write in the comments, "The market spoke, I should have listened." One of the most counterintuitive revelations from Livermore's trading journey is that the real fortune in markets isn't made through constant activity, but through strategic patience. In our modern world of 24/7 news cycles and one-click trading apps, this wisdom feels almost revolutionary. We're conditioned to believe that success requires constant vigilance and frequent action. Yet Livermore discovered the opposite. The greatest profits come from identifying the correct trend and then exercising the discipline to stay with it. Sitting tight, as Livermore called it, is perhaps the hardest skill for any trader to master. It requires a complete mindset transformation. When you're in a profitable position that's moving in your favor, every instinct screams at you to take profits before they disappear. The financial media bombards you with reasons why the move can't continue. Your friends tell you you're crazy for not selling. Yet the true mastery comes in recognizing that these are all manifestations of noise, designed to shake you out of what could become your most profitable position. Behind the scenes of every great fortune made in markets is this untold story of patience. Traders who bought into emerging trends and simply refused to be distracted by the day-to-day fluctuations that inevitably occur. Warren Buffett, George Soros, Stanley Druckenmiller, they all understood this principle of letting their winners run. Their fortunes weren't built on frequent trading, but on key decisions, followed by extended periods of sitting tight. This brings us to another dimension of Livermore's insight, the ability to distinguish between the main current and mere ripples. Markets never move in straight lines. Even the strongest trends experience pullbacks, consolidations, and periods of volatility that can shake your confidence. These are the ripples on the surface of a powerful river, and focusing too much attention on them can blind you to the underlying direction. Imagine standing by a mighty river, getting distracted by every eddy and swirl, while missing the fact that the entire body of water is flowing steadily in one direction. That's what happens to traders who overreact to short-term price movements while losing sight of the primary trend. This laser focus on the main current requires both perspective and emotional discipline, the capacity to zoom out when the market noise becomes overwhelming. The psychological journey of developing this perspective is rarely discussed, yet it's perhaps the most critical aspect of successful trading. It requires you to detach from the minute-by-minute battle and adopt a more strategic viewpoint. When you're caught in the weeds of daily price action, every small move against you feels like a crisis. When you focus on the main current, these same movements become irrelevant noise. Think about how many times you've sold a position because of a temporary pullback, only to watch helplessly as the trend resumed without you aboard. Or how often you've jumped from one stock to another, chasing small gains while missing the substantial moves that create life-changing wealth. These are the hidden costs of failing to distinguish between the primary trend and its temporary fluctuations. Livermore developed this wisdom through painful experience, losing fortunes by reacting to ripples before remaking those fortunes by focusing on the main current. His personal transformation offers us a roadmap to avoid similar mistakes in our own trading decisions. Join our community of disciplined traders by subscribing today. Together, we're learning to follow the trend, not the noise. Let's explore how these principles manifest in actual market conditions and the specific signals Livermore used to identify which trends were worth following and which were merely temporary diversions. His method of reading the market's true intentions goes beyond simple technical analysis. If you've ever sold a winning position too early because of a minor pullback, write in the comments, "I left money on the table." One of the most profound revelations Livermore discovered was that markets are inherently anticipatory. While most investors wait for news to be published before making decisions, the wisest traders understand that by then the opportunity has likely already passed. Have you ever noticed how a company announces great earnings, yet the stock inexplicably drops? Or how a seemingly negative development fails to push prices lower? This paradox exposes a fundamental truth about market behavior. Beneath the surface of daily trading activity lies a hidden wisdom, the collective intelligence of all market participants. Some of these participants have access to information or insights that aren't yet widely available. Others simply sense the changing winds of sentiment before they become obvious. Their early actions create subtle shifts in supply and demand that manifest as price movements before the official news ever breaks. This is why Livermore insisted that studying price action itself was infinitely more valuable than reading news reports or analyst opinions. By the time a story appears in the Wall Street Journal or is discussed on financial television, the smart money has already positioned itself. The news merely provides the justification for a move that was already underway. Think about this from a different angle. Imagine attending a concert where the crowd begins to stand up and move toward the exits before the final song ends. You could wait for the announcement that the show is over, or you could recognize the crowd's behavior as an early signal and act accordingly. The markets work the same way. They begin to move before the announcement, not after it. This understanding creates a profound shift in how you approach market analysis. Instead of asking, "Why did this happen?" After reading the news, you begin to observe what is happening by watching price movements. The former keeps you perpetually behind the curve. The latter puts you ahead of it. Closely related to this insight is Livermore's understanding that every price tick represents a vote in the great market democracy. When prices rise, it means buyers are more aggressive than sellers. When prices fall, sellers are in control. This simple truth cuts through all the complexity and theory that often clouds market analysis. No matter what experts claim should happen based on fundamentals, valuation models, or economic theories, the only reality that matters is what's actually happening in the market. Rising prices mean demand exceeds supply, period. Falling prices mean supply exceeds demand, period. Everything else is rationalization. This perspective represents a complete paradigm shift for most traders. Instead of imposing your will or opinion on the market, you learn to respect these collective votes as the ultimate arbiter of value. Your personal view becomes irrelevant in the face of this larger truth. Consider how liberating this approach can be. No longer do you need to agonize over conflicting analyst reports or economic forecasts. You don't need to predict what the Federal Reserve might do next month. You simply need to read and respect what the market is telling you through its price action right now. Let's explore how these principles played out in some of Livermore's most successful trades, and the specific signals he watched for to identify when the market was beginning to vote in a new direction. His method of detecting these shifts before they became obvious to the general public was key to his legendary status. If you've ever noticed a stock moving significantly before any news was released to explain the move, write in the comments. The market knew before the news. Perhaps the most lucrative insight from Livermore's trading journey is one that challenges our modern obsession with instant gratification. While today's financial media celebrates day traders catching quick moves for small profits, Livermore discovered that true wealth creation happens through identifying and riding major trends that unfold over months or years. This revelation transformed his approach from being a talented speculator to becoming a market legend. Consider the most successful investors in history, from Livermore himself to modern giants like Paul Tudor Jones or Stanley Druckenmiller. Their defining trades weren't quick scalps for small gains, but massive positions held through extended market movements. Livermore made his greatest fortunes shorting the market before the 1929 crash and riding commodity trends during World War I, positions maintained despite endless reasons to exit prematurely. This patient approach requires a complete mindset shift. Our brains are wired for the dopamine hit of quick wins, not the delayed gratification of letting positions develop over time. Every day, the financial ecosystem bombards us with urgency, breaking news alerts, hot tips, and dire warnings designed to provoke immediate action. Yet the hidden truth is that these small reactions rarely lead to meaningful wealth. Think about your own trading journey. How many times have you captured a nice 5% or 10% move, only to watch the same stock continue climbing another 50% or 100% after you exited? Those aren't missed opportunities. They're symptoms of a short-term mindset that Livermore specifically warned against. This brings us to one of his most powerful observations. Noise kills more traders than ignorance. This insight cuts to the core of why so many smart, educated investors still struggle to generate consistent profits. The problem isn't lack of information, it's information overload. The constant barrage of opinions, predictions and explanations creates a cognitive fog that obscures the market's actual direction. Livermore noted that an ignorant trader might at least follow obvious price movements, simply reacting to what they see. But the trader, bombarded with tips, recommendations, and market chatter, becomes like a cork tossed on the sea, pulled in multiple directions simultaneously, never establishing which way the tide is actually running. Behind this wisdom lies a counterintuitive truth. Sometimes less knowledge creates better results. When you strip away the noise, the endless stream of expert opinions, economic forecasts, and breaking news, what remains is the pure price action, the undiluted truth of supply and demand. Simplicity creates clarity, and clarity leads to decisive action aligned with the market's actual movement rather than what someone thinks should happen. This perspective offers a path to trading enlightenment that few ever discover. Instead of frantically consuming more information, successful traders often engage in a process of deliberate reduction, filtering out the meaningless chatter to focus exclusively on what the market itself is saying through its price action. Let's examine how Livermore applied this philosophy during periods of extreme market volatility, when the noise reached deafening levels, yet the underlying trends remained visible to those disciplined enough to ignore the distractions. His ability to maintain focus amid chaos separated him from his contemporaries. If you found yourself overwhelmed by conflicting market information and missed important moves because of it, write in the comments, "Less noise, more signal." One of Livermore's most controversial yet powerful insights directly challenges conventional trading wisdom. While most investors obsess over finding cheap stocks or selling expensive ones, Livermore discovered a counterintuitive truth. Price is never too high to buy in an uptrend or too low to sell in a downtrend. This radical perspective represents a complete paradigm shift for anyone trained in traditional value investing. Think about how often you've heard someone say, "I can't buy that stock. It's already gone up too much," only to watch it double again from there. Or perhaps you've been tempted by a bargain stock that keeps getting cheaper, draining your capital while you average down. These common experiences reflect the fundamental misunderstanding that price level alone should dictate your decisions. What Livermore recognized through painful experience was that momentum is a powerful force that often persists much longer than logical analysis would suggest possible. A stock that seems dear can become dearer for months or even years. Likewise, a stock that appears cheap can become dramatically cheaper, defying all fundamental logic. This insight reveals a profound truth about market psychology. Human beings are social creatures who tend to move in herds, and these collective behaviors create persistent trends that outlast rational explanations. The momentum of crowd psychology doesn't turn on a dime. It builds, accelerates, and eventually exhausts itself on its own timeline, not according to some analyst's price target. Behind this principle lies a transformation in how we view market participation altogether. Instead of trying to outthink the market by identifying correct valuations, successful traders learn to align themselves with the market's actual movement, regardless of whether it makes fundamental sense. This requires surrendering the ego's need to be right about what something is worth, and instead embracing what is actually happening. This brings us to another dimension of Livermore's wisdom. The market pays for right activity, not mere activity. In today's hyper-connected world, we're conditioned to equate busyness with productivity. Financial media amplifies this belief, celebrating traders who make dozens of moves daily and platforms that advertise zero commission to encourage more frequent trading. Yet Livermore discovered that frenetic activity rarely correlates with significant profits. The market doesn't reward you for being busy. It rewards you for being correctly positioned in harmony with the primary trend. One trade aligned with a major market movement will outperform dozens of small, noise-driven trades every time. Think about the traders you know who constantly jump from one stock to another, chasing headlines and reacting to every piece of news. Compare their results to the investor who identified a genuine trend and simply held on through the noise. The difference in outcomes is often stark and reveals the hidden cost of hyperactivity in markets. This realization offers a path to trading serenity that few discover. Instead of exhausting yourself trying to react to every market ripple, you can develop the discernment to identify significant trends and the patience to let them develop. This approach not only generates better financial results, but also creates a more sustainable psychological framework for long-term market participation. Let's examine how these principles manifest in real market conditions, particularly during those periods when conventional wisdom screams that a trend has gone too far, yet the movement continues unabated. These moments of maximum discomfort often create the greatest opportunities for those who understand Livermore's principles. If you've ever passed on buying a stock because it seemed too expensive, only to watch it continue climbing, type in the comments, "The trend was trying to tell me something." In the complex world of financial markets, we're constantly bombarded with sophisticated trading strategies, advanced technical indicators, and complicated fundamental analysis. Yet one of Livermore's most profound revelations cuts against this tendency toward complexity. The market inherently demands simplicity. In fact, he discovered that complexity itself is often just another form of noise designed to distract you from the essential truth of price movement. This insight represents a radical departure from conventional market wisdom. While financial institutions profit from selling complexity, advanced algorithms, proprietary indicators, and arcane valuation models, Livermore found that the greatest fortunes have been built by focusing on one simple thing: following the main trend. Everything else, no matter how intellectually stimulating or seemingly sophisticated, ultimately becomes a distraction from this fundamental principle. Think about this revelation in the context of your own trading journey. How many hours have you spent learning complex chart patterns, memorizing obscure indicators, or developing elaborate trading systems? Yet when you look back at your most profitable trades, they likely came from simply identifying a strong trend and having the discipline to stay with it. Simplicity created clarity, which in turn generated profits. This simplification process represents a profound paradigm shift. Instead of constantly searching for more information, more indicators, or more complexity to gain an edge, the master trader learns to strip away everything that doesn't directly contribute to identifying and following the trend. This is not just a trading strategy, it's a complete transformation in how you perceive and interact with markets. Behind the scenes of this simplicity lies another revolutionary insight. The market is not an opponent to defeat, but a force to harness. This perspective completely reframes the relationship between trader and market. Most participants approach trading as a battle to be won, positioning themselves against the market, trying to outsmart it, to prove themselves superior to it. Livermore discovered the futility of this approach. The market, representing the collective decisions of millions of participants, is infinitely larger and more powerful than any individual. Those who try to fight it, to impose their will upon it, to conquer it, they are eventually crushed. Instead, the successful trader adopts a completely different mindset, seeing themselves not as the market's adversary, but as its student and partner. Think of a river with a powerful current. The foolish man stands in the water, trying to push it back with his hands. The wise man builds a mill where the current flows strongest, harnessing that same power to turn his wheel. This metaphor perfectly captures the relationship between trader and trend. You can fight against the market's movement, or you can align yourself with it, using its inherent power to drive your profits. This philosophy creates a profound inner harmony that few traders ever experience. Rather than the constant stress of battling market forces, you learn to flow with them, reducing both psychological and financial friction. The market becomes not something to fear or fight, but something to observe, respect, and move alongside. Let's explore how these principles of simplicity and alignment manifest in actual trading decisions, particularly during those challenging moments when the market seems irrational or unpredictable. Livermore's approach offers clarity precisely when most traders become confused and emotional. If you've noticed that your most profitable trades came from simply following obvious trends rather than complex strategies, write in the comments. Simplicity is the ultimate sophistication. At the heart of Livermore's trading philosophy lies a profound psychological insight. Emotions are the ultimate ruin of speculators. This revelation isn't just about trading strategy, it's about human nature itself. Our emotional responses to market movements often drive decisions that directly contradict our financial interests. The internal battlefield between rational analysis and emotional reaction determines success or failure more than any external market condition. What makes this challenge particularly insidious is that market noise deliberately targets and amplifies these emotions. Think about how the financial ecosystem operates. Tips from friends or experts excite hope, creating the fantasy of easy profits. Dramatic headlines trigger fear, prompting impulsive selling at precisely the wrong moment. Stories of others making fortunes provoke greed, pushing you into overextended positions. Each emotional trigger serves someone else's agenda, while undermining your own results. This emotional manipulation happens beneath our conscious awareness. We tell ourselves we're making logical decisions based on new information, but in reality, our emotions have already determined our actions. The rational mind simply creates justifications after the fact. This hidden decision-making process explains why so many intelligent people still make poor trading choices. Their intellectual capacity is hijacked by emotional responses they don't fully recognize. The journey to trading mastery requires a radical self-awareness about these emotional vulnerabilities. You must learn to recognize the subtle physical and mental signals that indicate emotional decision-making is taking over. The tightness in your chest when a position moves against you, the euphoria when you see unexpected profits, the anxiety when markets become volatile. These are all warning signs that emotion, not logic, is driving your next move. This brings us to what Livermore considered the only effective weapon in this battle: discipline. While most trading education focuses on entry strategies, exit techniques, or analytical methods, Livermore discovered that none of these matter without the underlying psychological discipline to execute them correctly and consistently. Discipline in this context means the ability to master yourself, to silence the emotional noise, both external and internal. It means following your trading plan when everything inside you screams to deviate from it. It means holding profitable positions when fear whispers to take profits too early, and cutting losses when hope begs you to hang on just a little longer. Most importantly, it means ignoring the constant barrage of market noise designed specifically to erode your resolve. Behind the scenes of every successful trading career is this invisible struggle for emotional mastery. The market doesn't reward intelligence, education, or even experience. It rewards discipline, the ability to sit tight in the right position, ignoring both fearful and greedy impulses, allows the market to work for you rather than against you. This psychological edge separates consistent winners from the crowd of frustrated participants who never quite understand why their results don't match their knowledge. Let's explore the practical methods Livermore developed to maintain this discipline during extreme market conditions, when emotional pressures reach their peak. His systematic approach to psychological self-management provides a roadmap for anyone seeking to develop similar resilience. If you've ever made a trading decision in the heat of emotion that you later regretted, write in the comments, "Emotions cost me money." Livermore's wisdom about trading psychology and market trends wasn't just theory, it was forged through decades of triumph and devastating loss. What separated him from his contemporaries wasn't just his analytical brilliance, but his rare ability to transform knowledge into disciplined action. The path he illuminated is available to all of us, but few have the courage to walk it consistently. As you integrate these principles into your own trading journey, remember that transformation happens gradually. You won't master emotional discipline overnight, nor will you immediately recognize every significant trend. But with each decision, with each trade, you have the opportunity to align yourself more closely with the market's natural movement, rather than fighting against it. I've shared these insights because they fundamentally changed my own approach to markets. The freedom that comes from releasing the need to predict, to control, or to impose your will on the market is something that must be experienced to be fully appreciated. There's a certain peace that comes with surrendering to the trend while maintaining the discipline to follow it wherever it leads. If something in this video resonated with you on a deeper level, I'd love to hear about it. Type "The trend is my friend" in the comments if you've made it this far and found value in these timeless principles. Your engagement helps others discover this content and build their own trading wisdom. If you found this perspective valuable, consider subscribing to join our community of thoughtful traders and investors. We're building something different here, a space where market wisdom trumps market noise, and where discipline matters more than predictions. And if you enjoyed our exploration of Livermore's principles, I've created a companion video that reveals the specific technical signals he used to identify emerging trends before they became obvious to everyone else. Click right here to continue this journey with me and discover how to put these psychological insights into practical action.